OPEC Plus oil producers finally agreed to voluntary output cuts totaling 2.2 million barrels per day. Besides, Brazil confirmed its intention to join the cartel starting January next year. This move will add to the group's influence to the market. After all, Brazil is the world's 10th largest oil producer. However, oil prices fell sharply to settle at almost $80 per barrel. From a technical point of view, a local rise above the $84 mark ended with a sharp decrease in the volume of long positions. As a result, the asset dived to the level of $80, and this move is rather speculative in nature, which paves the way for the new price spikes. As for fundamental factors, some believe that such a steep drop in oil prices was attributed to a speech by the head of the ECB President Christine Lagarde. She signaled that the regulator could start cutting interest rates as early as this year, and this led to a trend shift in the currency market and a strong rally in the US dollar. Against this background, oil prices went down due to the inverse correlation with the greenback. Interestingly, the reaction of the European Central Bank to a sharp slowdown in inflation was much more important for the oil traders than the OPEC Plus meeting. The news about output cuts came about an hour before a reversal in the currency market, having no impact on the market. Nevertheless, a further reduction in the production volumes will support oil prices, which are expected to recover shortly. Gold also lost some ground but held steady just above $2,040 per ounce. After all, when monetary policy easing by major central banks is a positive factor for the yellow metal. It's this prospect that has provided noticeable support to gold prices. If the Federal Reserve signals potential interest rate cuts in the near term, the metal will probably rise to $2,100. However, its rally is likely to be gradual with the regular pullbacks. As expected, the Russian currency followed oil prices, with the dollar rising even slightly above 90 rubles at some point. Most likely, the market will now stabilize in a new range of 89 to 90 rubles per dollar, and the tax period is over and December has come, a month when demand for currency traditionally grows in Russia. And the only thing that can stop the ruble from suffering further losses is an interest rate hike by the central bank. And the Bank of Russia is expected to raise its key rate to 16% at the next meeting scheduled for December 15. And that's all for now. We wish you profitable deals. See you on our channel with a new video in a couple of hours.